Hello, good afternoon. I hope you are okay today. Today I want to discuss with you what I'm calling phase 2 of our accounting, where I'll be discussing the accounting equation. The accounting equation. The accounting equation, how to go about this, what items constitutes this equation. Okay, so most part of this tutorial will be I'll be reading. I'll send through the PDF notes later. For the sake of time, my concentration is on the practical part, where we'll be doing some calculations. That's why you see me doing the writing mostly. Okay, so to start with, let's define what is a business. What is a business? So we are saying a business is a commercial concern. A business is a commercial or industrial concern which exists to deal in the manufacture, resale, or supply of goods and services. A business is a commercial or industrial concern which exists to deal in the manufacture, resale, or supply of goods and services. And of course, the purpose of every business is to make profit for its owners. Some people might be wondering, what is profit? Profit is the excess of income over expenditure. And what is loss? Loss is the excess of expenditure over income. Okay. And then under business, we have what is called the business entity concept. The business entity concept, which states that a business is always treated as a separate entity for from its owners for accounting purposes. A business is treated as a separate entity from its owners for accounting purposes. This means that the business can owe money to, or the business can be owed money by its owners. The assets and liabilities of the business are separate from its owners according to accounting. Okay, so the assets for the business will be treated separate, and the assets for the business owners, of course, will be treated separate. That's what we mean by this entity concept. The same applies with the liabilities. Okay, so let's quickly go direct into the accounting equation, which is my area of interest today. So let's write the accounting equation, the first accounting equation. We have about 5 of them. So I'll put them according as the way they follow each other. The first one goes like this: assets equals to capital plus liabilities. Assets equals to capital plus liabilities. Don't worry about the figures. The figures will be coming in shortly so that our equation makes more sense. But for now, that's what we need to know. Assets equals to capital plus liabilities. So if we have a figure here on the assets, our equation is saying it should be equal the side. Okay, it should be equal. These two items makes up what we are calling assets according to the accounting equation. I'm sure the figures will elaborate more and they will make sense. Okay. And then our second equation goes like assets equals to capital plus this has to be capital introduced, the first capital in the business. Yes, the first capital introduced into the business plus the retained profit. Retained profit plus liabilities. Okay, plus. Okay. Capital introduced plus retained profit plus liabilities. Okay, what is a retained profit? These are profits which you haven't withdrawn from the business. You trade, you make profit, and you leave the profit in the business. That's what we are calling retained profit. It hasn't been withdrawn out of the business. Okay. Okay. I think with these two equations, let me introduce the figures so that we see how our accounting equation will make sense. Okay, so I have an example here. Example number 1, we are saying, question 1, we are saying, suppose you have 1000 kwacha, and you decide to start up a vegetable business. Vegetable business, okay. The accounting equation will look like this. Just like the first, our first equation, our question says you have 1000 kwacha and you decide to start up a vegetable business. Just by you introducing the funds in the business, the accounting equation begins to change. So the accounting equation will look like this. Your assets now, where we are saying assets equals to capital plus liabilities. Liabilities, excuse my handwriting, it's kind of bad. So your assets, we are saying now you have 1000 kwacha equals, and your capital, you have 1000 kwacha. Your liabilities, the business doesn't yet have any liabilities. Okay, this is how your accounting equation looks from the first accounting equation that we wrote. Let's look at, okay, let's continue with our question. The same question. Here you just decided you have these funds and you've put them in the business in the first day. That's your first day. We'll say day 1. Second day. Day 2. Day 2 of your business, the same capital of yours. Now you decide to buy, 600 kwacha, a table for using in the business, a table, and we are saying you are going to order 340 kwacha goods, which are your vegetables, okay. And then we are saying your 30 kwacha you are going to keep as cash in bank. You are depositing this 30 kwacha in the bank, and then the 30 kwacha you are keeping for small change in form of cash, as cash, okay. So you've used your 1000 kwacha in that form. Our same account equation 1, will look like this, where we're saying assets equals to capital plus liabilities. Assets equals to capital plus liabilities. So our capital, we still have 1000 kwacha indicating here. And we still have 0 liabilities indicating here. But our assets now has been divided. We now have a table, 600. It's also an asset. And then we have goods, which are vegetables. There are also assets valued at 340 kwacha. And we have cash at bank, 30, and we have at hand cash 30. Okay, when you total this, it's still giving us 1000 kwacha, and on the capital we still have 1000 kwacha. our equation is still balancing. I'm sure you know the use of equations is for them to balance. Okay, it's for them to balance. So our equation is still balancing in that format. I'm sure my explanation is doing its purpose to explain the accounting equation. We are still on number 1, but even number 2 is simple, because the only thing in the equation 2 is where we have traded and we've made profit, and we are calling that profit as retained profit. So basically it's just you knowing this item is appearing under assets, under capital introduced will keep on growing if we keep on having retained profit. If we keep on making profit and we are not withdrawing, our capital will be increasing, as well as our assets will be increasing, and we'll still be having no liabilities unless we borrow something, we make a bank overdraft, or we get a loan, or we get some goods on credit from suppliers. Okay, I think for today I'm trying to cut my video short. I'll end from here, and then I'll explain more up to the 5th accounting equations, but I'm sure you've gotten the concept, and it's the same concept which we will keep on applying. I'm sure you've understood. That was the purpose of this tutorial, is to make you understand the accounting equation. Thank you. Enjoy your day. This video is prepared for Success Knowledge Center. Thank you so much.